Hello, today is Friday. It is 4/16 on May 5th, 2023. The weekend report title is Stock Market Working Through the Wall of Worry, and this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. Friendly reminder, this post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney. That's me. The material is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, solicitation to buy or sell any securities or to adopt any investment strategy. Essentially, we're keeping clients aware of what's happening, the moves we made, lessons learned, and let's hit the charts. Okay, so here's the week. This makes it seem like it wasn't that big of a deal. The S&P 500 was down 0.80%. Let's take a look at the day, though. I mean, we're getting huge swings, okay? The day, and it was higher at one point, intraday. So it was ugly. I mean, it was really, really bad at one point, and we protected when we needed to. Here's the performance that we had this week. We had a positive week. We were up 0.76% versus the S&P 500 0.8 to 0.78%. So we beat the index by 1.54%. The rule that we implemented last week, kind of a learning thing, because we've actually been trading quite well. But one thing that we needed to implement was if it gets severely oversold and we see a double tap like this, hold on. If we get a double tap like this, that is circled. This was last week when I protected really well, did really well, but didn't ride the move up. A double tap in RSI means it's pretty washed out. Even short term, like even if you're in a downtrend, which we were, you can still create alpha, even if it's short term, okay? So that was a good that was a really good change that I made, and that paid off for us this week. That it was literally learning from last week's mistakes. Preventing dips has not been an issue. We read those really well. Getting the upside has been the issue. So one more additional rule that I think is I've always known, but I need to do better. And this today could have been a better day, as you can see. Like we had across the board a really nice week. The only down day, on Thursday when it was ugly, I started positioning, and that worked out really well. And that's how we had a good week. Like when this was down, we were up. When this was down, we were flat. When this was down, we were positive. So we traded really well, especially given the fact that there was a Fed meeting, Apple reported, jobs report. I size down and just take quick winners, as you can see over here. Here's my buys and sells. So we had a really good win rate. And we are 50% invested at the close. And that is based on risk reward. So what can I do to improve on a day like today that had a huge breakout move? And I know it's just hard to do in the real time because it happens so fast. In general, when you break this is an example of last week and this week. When you break the 5-day moving average, which is this orange line, if the velocity of the move is fast, it usually just continues. The velocity of the move above 4,100 was very fast, and I actually got out right at that level, but it took off. I needed to be a little more patient, but in short, we had a great week. We beat the index by 1.54%, which is very difficult to do. I went into this week with the mindset of quick winners, don't do anything stupid, don't get greedy on a day like today. The one thing I wish I could take back was today selling a little bit early. We are 50% invested at the close, as stated. The week, as stated in the right, we want to get above. Last week was get above 4150 and 4166. We could not do that, and you could see I had really, really good exit points at 40. Hold on one second. We sold at 41.80 and 41.78. So that's really good risk reward in terms of just getting out and waiting. We traded the levels, and that's why you trade the strategy. You're like, Jonathan, I keep hearing that this is a short-term strategy, and it is. What I'm waiting for is this. And I showed this in the notes. Where are you? Yeah, so this drives people nuts, gets everybody out, okay? So the S&P 500 has literally gone nowhere for a year. Don't believe me? May, even February, 4,200 is the level. We tried to touch it, couldn't hold it, and down we went. Now we're trying back up again. This is actually consolidating well below a key level. So this is optimistic. I'm optimistic here, but we still need to be cautious in case there's still some issues out there. The biggest issue is regional banks, which, looking at that chart, KRE had a big move today, but it could be a dead cat bounce. That's capitulation. We'll see if this has any additional movement here. If it keeps going, this would be really good for the market in general. So regional banks are the issue. Inflation is not the issue. The Fed, we knew exactly what they were going to say. They raised rates 0.25. Nothing surprised there. So what have I been saying for a long time is they're going to continue to try to kick you out, but I still think 4,200 will happen. Eventually 4,300 will happen, but it's not going to be a fun route to get there. So big moves up and down. We got in at 41.36 right at the close. So overall, the risk reward and what I'm seeing is, let's take a look real quick. After a big move, we're probably going to get some consolidation. That's just reality. So we did get a little bit out oversold. It wouldn't surprise me to hit 41.50 early next week or 41.22. The lower we go faster at the beginning of this week, probably the better risk reward, to be honest with you. So I have some on because we are above a 5-day moving average. As you can see here, we're above a 5-day moving average. Would it surprise me to test this level right here where the 10-day and 5-day meet? Not at all, but it's probably going to scare people to the upside first. But regardless, we're in an uptrend at this point because we're above the 5-day moving average. These are huge moves. You just try to get a piece of it and not get greedy. Okay. So overall, risk reward is okay here. If I get a good target above, I take some off. It's that simple. So risk reward is okay. What else did I want to talk about? So the key levels to hold next week, which is in the top right, hold 41.33, 41.14. 41.14 is the cross, as I identified right here. Meaning if it goes below there, probably need to be pretty cautious. Okay, so that was the breakout. Let's take a look at some individual stocks because we're finally starting to get some good movement in a lot of these names. XLB. This is kind of what you want to see from home. I did materials, home builders. It should be XHB. There we go. Home builders, this is a good sign of strength and it's cupping up, and it would not surprise me to see that continue. It's what you want to see. IHI, which is medical devices, another area that I really like, had a good day, tested the 20-day moving average and bounced. That's really good. So there are plenty of areas that I like here. SMH was getting smoked at one point, but it bounced where it needed to. This is semiconductors. Amazon, surprised this did not do better today. I thought the QQQ would rotate to this area. And it had a decent day, and this looks pretty good. After the earnings, ugly, and we're bouncing higher. Tesla, Very nice day, and I think that gap could easily fill. Okay, I think it's a little overdone to the downside. So overall, I like what I'm seeing. The silver bugs, for those that need to see it, this is generally what happens when the market gets a little more interested in long positions. People tend to hedge with silver and gold. So it was obviously a down day, but it's still bounced kind of where it needed to. This could still be an in trend area. So overall, risk reward is not bad. Big moves like this, you tend to get some sideways movement. So I think the general trend is still going to be higher, but it's not going to be fun to get there. Still same situation, trade in and out, not get greedy, because it doesn't take much for this to drop at this point. So overall, we saw a lot of good things this week. It started off with a terrible beginning, but the big dips keep getting bought. I mean, at one point, what is this? At one point, it was down 2.63%, even more at one point. But collectively, at the end of the day on Thursday, the market was down 2.83 or 2.63% and closed the week only down 0.78. So that's how much it's moving. But overall, we traded pretty well this week. We've actually been trading really well and taking targets. What I need to get better at is when it breaks a key level to the upside, is make sure I have some in. So overall, the implemented rule was really good. Some interesting things that is in the commentary that we'll show you. This is the active investment managers survey. This is basically showing the sentiment is extremely bearish. Okay. It doesn't mean it's going to go straight up. I want to make that very clear. But when everybody is bearish, it usually leads to good things, because it doesn't take much for the market to move upward and everybody chase it. Perfect example today. Everybody needed to chase it because we kept going higher and higher. And also credit to Ryan Dietrich and Christian Frommerts for this detail. Massive flows this week on Thursday into money market funds. Just people freaking out saying, oh, we're going into a recession. The worst possible thing you can do after you see something like this. And of course, what happened? You have a massive, massive day like today. As you can see, I mean, that is a huge candle and closed near the high. So volatility, I'm expecting probably one of these kind of choppy, not much direction until later in the week, hopefully. So thanks for your trust. Good week. Get outside. It's nice, and I'm going to take advantage of it because I need some sun. Been indoors a lot. So thanks for your trust. We'll take it. Thanks, guys.